Okay, hi there guys. Just let me know if you can hear me loud and clear. Clear and loud. Right to go. I'm just having a bit of a stretch. I've been sitting down for too long. Alright, how many have we got in today? Not too many actually. Market's going up, no one wants to hear about it. Alright, am I coming through okay? Assuming so. Actually, I'm probably just better make sure, eh? Okay, you just want to check. We're all good. I might be having an issue with the stream, but in YouTube, sorry, YouTube's been playing up a bit lately. Hmm. Alright. It looks like from my end we're all good. Let's just get up and running then. All right, welcome to Trade Setup live stream. What are we now? We're the 22nd of November. It's ever so slowly edging towards Christmas. Guess we're all looking forward to that, ready and raring. Bit of a break too. Bit of some festive seasons, bit of eating. That's the best thing. Um, anyone that's new, welcome. Anyone that listens to this later on that's for the first time, welcome to Trade Setup. Just remember, if you do have any questions after the stream or anything like that, feel free to send through an email to support@tradesetup.com.au. Just bear with me 1 second. I just want to test something here. All right. Just make sure we're coming through okay. All right. Pretty sure it's all coming through. It's all good to go. Now, yeah, anyone that's new, just feel free to join us at Twitter in the top left-hand corner, Facebook the top right, and subscribe to us at bottom right-hand corner at YouTube. Now, overnight, it was a bit of a bounce. We sent out an alert on the Dow. When was it? Yesterday afternoon, probably around 5 o'clock sometime, Melbourne time, Sydney time. Um, just regarding, just regarding the US. It looked like the US actually. So I was watching the US. Oh, sorry, no, I was watching the SPY yesterday. Just trading off the SPY. We'll go over that in a minute. I just want to show you a couple of things on the futures and a few things to look at if you happen to be looking at things intraday, of what can give you a bit of a heads up to. We could be looking towards a bounce. It's not picking bottoms. It's more just a few different signs. Now, when I was watching it, the Dow actually rallied from down about 40 or 50 to up 40 or 50. So it rallied 100 fairly quickly, which is pretty good. And that was just a bit of a heads up that we're probably going to be looking towards a considering that it's a shortened week in the US, we had there you go. Just sorry, there's a little girl walking in there. So we had a shortened week. I think they're off tonight for Thanksgiving, and then Friday's a shortened session over in the US. So a lot of anyone that's sort of powered, got a good little run down on the short side, would have more than likely just been closing it out because you never know what's going to happen over a longer or extended week. Sorry, extended weekend. Um, so yeah, that's why we're expecting a bit of a bounce last night. Now it did bounce, but nothing too. Actually, the Dow was pretty much flat. I think it was the S&P, the broader market, bounced slightly, and the actual no sound. Okay. Um, and all right, guys, can anyone hear anything at all? Just chatting away here. You there, Mel? Can you hear anything, mate? Ah, that's great, isn't it? All right, let me just check something, guys, because it looks like it's going through on the stream. But let me just disconnect. All right, guys, can you hear me now? I'm coming through loud and clear. All right, can you hear me there? Can you hear me there? Anyone? All right, you want to hear me, guys? Okay, that's better. How are you going there, John? Can you hear me through there now, mate? To make sure I'm actually. All right. Oh, let's just get into it. I'm assuming it's coming through. Sorry about all that, guys. If anyone else can't hear, just let me know. All right. All right. So we've had the Dow last night. Yeah, it didn't do too much, but I'm having problems with my own chat here. Yeah, so they've got an extended weekend, so off tonight. So hopefully we can hold on to these gains. We're up 38 at the moment, and I think we did power up. We bounced off some key support, and it was mainly on the SPY, and it sort of extended on the ASX, which you can see just here on the daily. You can see it sort of punched through that. What was that low? 56.24, punched through there, bounced back up during the day. finished off the 5600 level, which it tested down towards 56. And it wasn't so much a key level on the ASX, but it was a fairly key level on the futures market. And we know that they sort of use the futures market off and on just to hedge, for different reasons. Just transition that. Why is everything playing funny buggers now? All right, that should be better. Can you see the screen okay, guys? Should be clear enough. So yeah, it's just continued up today, only because we've got a small bounce. So it'll be interesting to see how they go. After the Thanksgiving holiday, we'll have. I don't think the futures are open at all tonight, and they kick off again Friday night. But like I said, on a shortened session, I think it's a half session. So it'll be interesting to see how they go then. What we'll do, there's probably no real need to look over the actual charts. Let's have a look at them actually, just to see what the actual. Actually, just look at the Dow. We'll look at the Dow on. This is what I want to go over. Just where we're at. So this is a chart. Greg, Greg, how are you, mate? I was actually, funny enough, I was thinking about calling you just to see how you're going. All right. It's good to see you, mate. Good to see you. I hope everything's going well anyway. Now, 30 minutes. I just want to go back to the daily because I think it's interesting. And I'm not saying we are. The Dow was holding on to some gains up until the last probably hour or so when it dropped about 100 points. So it was doing okay up until the last hour. But this is what I'm seeing. It's mainly got to do with sort of the longer term charts. And you can see just going off the weekly, we've touched down here and that was way down at 15.48. That was back in 2016 where it started this big bull run, a big trend higher. And you can see that still just touched down and it did probably back in October. And then it touched down there again just last night and the night before and the big, wash out into the lows. Now, just remember, I think a lot of people see that sort of acceleration lower and it brings more about fear than anything else. And that's what you don't want to get caught up in that so much because the markets tend to drive down a lot of the time like that. Yeah, Magna, sorry, I just saw that. So it looks like a lot of the times when they can drive down hard like that, what it will do is starts flushing out a few people, what we call weak hands. So anyone that's holding on to something and it's, they're obviously getting scared, they're getting fearful, especially if they're long, if they started trying to buy in the dips and not letting the market play out. And you can see these moves, there's still quite a bit of volatility in them. But what I was looking at last night, and it's probably more, I just thought it would bounce last night. I don't know if this is going to continue on into next week, or we're going to fill that gap back up to around 25,000 on the Dow, which means we're another 600 or so points up from here, which would be good. It should be handy. Who knows what's going to happen, but you just know that after a couple of big days, and we've got to remember what's happening what's happened the last few days. If anyone positions short and moves like this do flush out quite a bit, and you can see that the market sort of popped up. This move down there, that original pop down there, it would have flushed out a lot, but not quite as many as you probably think, I guess. And a lot of people get caught holding the bag down here and they just waiting for the bounce. And once it starts coming about and it starts running out of steam, you might get that secondary wave, which can really flush out. Now, the first thing you'd be doing is looking down towards some support zone. Is the market stretched? What's happening? Is any sort of zone which could potentially provide some buying opportunity or a reaction? So we're looking more to zones where you could potentially see a reaction and you want to take into account how the market's going into that zone. If it's just crept down, it's different type of price action. Say if we got, just draw it up on here, and it's always important to assess what kind of price action you got. If the market's sort of pressed down, well, let's just drop that for a minute. If the market's pressed down into a zone like that and you've got a support, that's a bit different than sort of edging down. Even if it edges down and you get this type of thing just above the zone, that for me would lead to a powerful move straight down and through. And you would expect that down. When you get a move that's just gone bang straight down into a support zone, I tend to think that we're going to get a reaction up off there because you've got to remember there are shorts that are coming into play that are going to get potentially squeezed out or they're going to look for a profit zone. They don't necessarily, shorts, especially on indices, on stocks, shorts don't hold for that long because it's not really, shares are not really made to go up, or indices not, sorry, they're not made to go down. They're more made to go up. There are crashes and they happen hard and fast. So if you are short, you've got to bear that in mind. If you're going short into a market, you've got to, and it stretches, pretty much like this type of price action, it gets stretched into, say, a support zone, whether we might have support, might have rising support, whatever it is. If you get stretched into there, you're going to be thinking twice about holding it or taking a partial. And what that will lead to do is a bit of either a stall in price, and then you get your bargain hunters jumping out and looking to pick up a bargain here, looking for that price to bounce back up. Because it's always bulls. People, I think most people, and this is what I try to get myself away from, is either being bearish or bullish, is leaning one side or the other, which I think can be, as a trader, and trying to keep partial or impartial to price movements and price action. You can't really you can't really afford to be like that, because obviously you're going to be biased to one side. If you're biased to the bull side, you're going to be looking at this as a great buying opportunity. And then you can turn around and it does crash and you get yourself caught, because generally people do not want to admit they're wrong either. So if you lean to the bull side and you start buying it off, just picking up on a bounce, say the market's pressed down, you just look at that buying opportunity, bounce straight up, and you lean to the bull side. If it starts coming back down again, and it gets, say it doesn't come back down to here, but say it gets back down to about where your entry is, I think your ego is going to stop you from getting out, because you don't tend to want to admit you're wrong, um, and you're still leaning towards that bull tendencies. So when the time comes, and it will happen, not whether or not it happens a lot, you're going to get caught on the wrong side of the market. If you have stops, that's great, fine. But then if you lean to the bull side all the time, it could mean that you're missing out on movements to the downside, or you're missing out on seeing the price action that's telling you to get out when the market looks like it's rolling over or the market's showing signs of weakness. I think it's very important to just assess it and try to keep an open mind. Assess it from both sides of it, both sides of the price action. Like, meaning if you're coming down to a zone, assessing, is it stretched, or has it built some sort of price action where it's edged down, and then you got this choppy price action just above a support zone. I tend to think that's going to lead to a break of a support zone, or if you flip that over and reverse it, if you get the market powering up, let's just draw it. Say the market's pressed up, we've got a resistance zone there, and I think I talk about this quite a bit. It's popped up and it falls short of resistance, so people are looking to take profits there. But then what happens? It can just sort of sit around, crunch around below, but hold on to the highs. For me, that's going to lead to, more often than not, I look at that's going to lead to a move and a break through a resistance zone. It's going to just take people out in a fast swoop. So anyone that's actually just sitting on the offer, meaning looking to short it potentially, they're just going to get cleaned up. And if they don't run a stop, they're going to get cleaned right up. And that's going to just be fuel for the market to continue on higher. So it's always important to assess what type of price action you've seen. Is this going to be a major lower high? What's happening on the weekly? What's happening on the daily? Is this just a pullback on the daily or the weekly, and just preparing for a break up through resistance? So it's really important. I don't know how I got sidetracked onto this, to just try to keep impartial to what's happening in the market. So that's why I'm talking about this market that's just pressed down to the support zone, and it's gapped down. You've got this 500-point down day. It's going to bring about a lot of fear. Of course, it's going to bring about a lot of fear. But when you look at it from the bigger picture, and this is only on the daily, really, that trend has not really broken just yet. That longer term, you've got this longer term weekly trend. What we've seen is a big blowout here, and the same sort of fear would have gripped the market back here, especially when you got these two red candles. You can see what happened. The market's thrown down into that support zone. I actually haven't got my, okay, no, and it was stretched at that same time. It's stretched in the support. We're getting stretched now into the support zone, potentially going to hold up and just continue on up. Not saying anything's going to happen, but just assessing it, taking apart the fear, or taking out the fear of the actual equation, and looking at the price action. I'm looking at this zone as potentially going to hold up and maybe leading to a bit of a bounce, maybe leading. And what I want to see is ideally the volatility. So volatility, I mean big moves down, big move down. Have a good reaction straight back up off that, say 2400 zone. Reaction straight back up, took out the lower high, and then come straight back down again. So that's a lot of volatility, just going up and down, up and down, and up and down. Sorry, John. So you got me starting the whole process, mate. It gave me a chuckle. At least you could listen to it later on. So you can see that volatility. What we want to see is the market just, a few candles, maybe chop around this zone, and then start to get those narrow range candles where the market's squeezing in. You're starting to get the selling pressure subsiding. The buying pressure is obviously not quite there and starting to pick up. So it's going on the reverse side of it. And then you start getting a bit of an edge higher, a bit of a pullback, and then you get more of a controlled move if that's what's going to happen. And a controlled move we can work from. It's really hard to work from, jumping into the markets when you're seeing this kind of couple of green candles, which rallies from, say, 24.5, what's that, up to about 25. So that's 800-point rally in a couple of sessions. So that's ideally not, it's going to be tough to trade. It's going to really cause you some heartaches. You're going to be chasing the market potentially. Um, I don't think that's really what you want to trade. So you want to see when the market starts to, maybe retest the zone a couple of times. That don't forget we've tested it back here. We probably pushed through it and then rallied off it. Come straight back into that 24.2 100 support zone. Rejected that in the day. Had a good little rally. Straight back into that zone, and we're starting to potentially find a higher low or start to hold a higher low. We want to take note of all that. The number of times it's actually traded down into that, say, 24 to 24.5. I know it's quite a wide zone, but it's traded down there and it's rejecting off that zone. If we can get it reject again and we can get some sort of higher low to build on the Dow and the volatility come out, I think that's going to lead to a good little push up and potentially straight up and through 26.6. Who knows? I know there's still quite a few headwinds out there, but if they, the China US trade issue has been going on for quite a while, you probably suspect that something is going to happen on that front soon, which I think is going to be a positive move towards um, back into global growth and the US and back into equities, people putting risk back onto the table. Because if they take off tariffs on China and they work something out, they work a deal out, that's going to be better for a lot of companies. Now, also, I think the EU are working out their issues with Italy, which may find that they subside, the problems subside over there in emerging markets. Don't forget, in emerging markets too, the US dollar potentially not going to get as many rate rises as what they originally thought. I think they're looking at one this year, well, probably next month, two more next year, that they pretty much the market was factoring in. And now they're saying that inflation's about in line with their expectations, which would probably mean that there's no real need for two more next year. Who knows just yet? But the market's probably going to refactor that in, which means that emerging markets, all the pressure that's been on because of the rising dollar, higher interest rate, higher cost of debt, maybe not quite as bad as originally thought. So that may, that headwind may ease quite a bit as well. So you've got a few things that could lean towards this, the Dow holding up around, just trying to add it all up, add a bit of a fundamental twist or a macro twist to the market. But there could be a few reasons why it could hold up here. And I'm seeing on the chart too that on the weekly basis, if we just go to a weekly chart on the Dow, it's still, nothing's broken. Here's your anchor here. It had a big pullback at the start of the year at 23.4. We're now down at 24.4. I mean, it's not looking so great. We potentially got the lower high there, but I don't mind when it, smashes down, pops straight back up quite hard, and it comes straight back down the zone. It hasn't broken any serious support level on the weekly anyway, just yet. I mean, if it does, we've got a bigger issue at hand. I think if we do break down at least through 24.1, thereabouts, or through 24, I think we're looking at a breakthrough 23.5, and then we've got a bigger problem there. And there is the potential that we're sort of could be looking all the way back down if we have a major correction. I don't want to be scaring anyone, but a major correction, we could be looking down to sort of even 20,000. So that's 5,000 points, 5,500 points down below where we are now. But we'll see. We'll see. Does that make sense? Just what we're going about there, guys. So we'll have to wait and see what happens. That's just my issue with the Dow. Now, the ASX, holding up quite nicely. I wouldn't expect much more to happen into the close today, considering the US is not going to be around tonight. Nothing much has changed. I just like the fact that we're having a reaction. Let's just get rid of that. We're having a reaction off this support, off this 5,600. And if you look at it in terms of a weekly chart, we still got this support zone holding up in my book. I don't mind seeing a couple of wicks and closing back above it. It can do that time and time again, and I see that more as a washout. Just clean the market out, and the market may need to clean them out. You don't forget we're on that sort of overextended to the downside or oversold territory. It is a good little zone where the market potentially, and it's had, really has pressed hard down into that support zone, where it could find a good reaction higher. But again, it's the fact that we did hold that anchor down is still got me a bit not concerned as such, but I'm still looking for some sort of bounce, potentially back up to 5,900, retest there, or we're going to get a bounce to 58.50 or 58 to maybe a lower high that will press us down eventually through that support zone. But we'll just have to wait and see. But at the moment, for me, it's not quite adding up. The fact that we're oversold down here, we have pressed down. It's generally anyone that's wanted to sell has had more than enough opportunity. A bit of a push down here was your first heads up. The fact that we grinded back up, and we were speaking about this quite a while for thinking this was going to be a lower high. And then we had that original press down, and you had this green candle, and don't forget this is a weekly candle, where it popped back up, and then that final press down to 56.50 or 5600 before we had a couple of green candles. So there's been more than enough opportunity if you're fearful, if you want to get out, to get out. So in that respect, how much more selling's on the sidelines, in the market, or how many more buyers are in the market that want to get out, that are really feeling the heat, that are willing to get out? Of course, there could be a few, but yeah, I think the bulk of this sort of move up, they've been flushed out. Anyone that sort of wanted to get out, especially even if if you held from way back the start of 2017, you've potentially been flushed out. So the last couple of years' work, year and a half to 2 years' work, have been unwound in about a few months, in a couple of months. So yeah, it'll be interesting to see if we can get a reaction up off the air and we can start chopping around, say between 59, 56.50, and then start the hold. But I think it's got to go together with the Dow actually holding up from where it is now. Now, before we get into it too much, I want to just tick over. Now, there's two things. This is what I was looking at, and I think I put it in the forum that we've got going. Just talking about this in the forum now, just to show you. I've got this major support zone. So, Mark, this is the SPY 200, the futures, and I take note of the futures a lot, especially as a bit of an intraday view of whether we're going to get some strength or weakness into the market. And I guess I look at it more because I actually trade the SPY. But it is interesting to see what the market's doing at a certain level, because this factors into the ASX, what they're buying, whether they're going to be buying for the day or selling for the day, whether we're coming off a serious base, what's going to happen. All these sorts of things. I do look at the SPY quite a bit, so I tend to mark this up every morning. I keep the major zones on there and remark it up in the morning just to see what could be happening, which way we're leaning. We're going to be biased up for the day, biased down for the day, just to give me a feel of what's actually happening. Now, I had this marked up for quite a while, 5601. And I don't know if I can see, it's way back from, when was that? That's not November, is it? Yeah, 3rd of November, start of November. Is that right? Yeah, so the start of November, we had that, which had touched down there. So if we just drill down, and this is the price action coming to yesterday, the overnight markets have pressed down. We know, the markets have been smashed the night before, and the SPY actually does obviously trade at night, and it does factor that in. But you're looking down at that zone, 5601, it's so close to that zone, you can pretty much, I wouldn't say guarantee, but they're going to be gunning for that zone. Anyone that's probably buying it up here, they're going to get squeezed out in the open. You can see the market's actually ticked down, it's gapped down and opened or matched off at 950 just before the ASX is open, just below that zone of 55, was it 55.94? And what that does is squeeze a lot of the buyers out, the last sort of remaining buyers. And what it may do also is get a lot of potential stops that are selling on stop below that level, expecting the market to completely crash. It gets then stopped into a trade. And what they may be doing is just, who knows, they may have their buy entry way back up here. But what that is all generating is potential fuel for a run higher and a squeeze higher. So I thought I'd just touch on this just to show you, some price action, different price action. I guess a bit of a tip to watch out if you do watch the intraday markets, just to get a bit of a feel, knowing that we've got a major key support where potentially anyone that's being short into that zone may buy back. maybe looking to buy back, close out, book their gains. And what you probably get on top of that is buyers willing to just watching that zone as a potential bounce too, as a shorter term trade for whatever reason. So there's quite a few factors which you line them up and put them together is why there could be some strength coming to the market. And the fact that we gap down below it, we clean out a few, or either clean out a few late buyers, get them stopped out, and potentially some shorts stopped into the market as fuel to buy back up. And then the market proceeded just to pop up. You got this lower high, press back in, but the fact that it just sort of retests that zone, it doesn't get down to the lows at all. That's a really good sign of strength. Now, I think I'm on the 5-minute chart. I think I shorted it here. I shorted again down here. I was on this green candle, but the whole time I had it in the back of my mind as just to be careful, because if this does bounce, it's probably going to go pretty hard because of just what we spoke about. So just taking into account all that, making sure that you're on the front foot and you're not just going to sit there. You've got to be reactive rather than just sit into the market. And this applies to stocks if you trade intraday. CIA. All right, and so I just read the comments there. So it's just being reactive, and like I said, it can apply to shares. It can apply on the daily, where the market can actually gap down. It can pop back up, and this is what I talk about time and time again: is washouts. Market can wash out a level. Sometimes it can clear the way, but if it doesn't come back and attack those highs, that it could either be a bit of weakness or it's starting to show a bit of strength into the market. So it's all these price action is these little tips to take note of, especially when you're trading around some key support zones or up at some key resistance zones. Just say this was the reverse. The market's gapped up above a zone, it pulls back up below the support zone, the resistance zone, falls back into the range and starts to head back up, and it can only go as far as retesting the high. Then you're going to be concerned if you actually got long. So you really got to just take note of what's happening, and you might find that the overall it's due for correction, and the market was just clearing out a few traders, and it's what the market will do time and time again, especially if it's up near resistance on stocks, can open up behind, above, pop up. That's going to stop a few people in who bought it on, as looking for continuation higher, come back in, and they're fuel to really get squeezed out if the market's going to head lower, because the last thing you want to do is run it without a stop. And I think a lot of, especially CFD traders, will have stops in place, and that's just fuel, sell stops to head them, push the market lower and start creating that contractive price action. All right, so I thought I'd just touch on that, and again, we look at today's price action. Look what happened today. So we've got a support zone, the same sort of thing through here. The market was looking a bit negative coming into that open. I think it opened. So it was this red candle here. That was 950. So that was the open. And you can see that price action, especially when it was chopping around these highs, say 56.70, sort of banging around here since about 3:30 in the morning or 4 o'clock in the morning. So the last 2 hours of the session or 3 hours of the session. All right, 4 o'clock. It closes at 8, so 4 hours of the session. And the last hour or so, when the Dow dropped about 100 points, our market sort of pressed down. So looking at that, there was a good chance that, especially if we get stretched into this zone, that's why it's always prudent. And I look at a 5-minute mainly, or if you look at the daily, the weekly, it doesn't matter. If you look at intraday half an hour chart, seeing if it's going to get stretched into that zone, which it did, and then it's turned around and bounced straight back up. So as soon as you start getting a good reaction off that zone, and it rejects there fairly quickly, you've got to, especially if you buy a short, you've got to be careful that you're not going to get turned around and get squeezed back out, or you're not going to get stopped in. And you really just want to make sure that you're letting the price action tell you when to get in. So I don't think here, I wasn't even watching it just then, but I would have had nothing biased there at all. I wouldn't just jumped in long, especially off the 5-minute. I don't think anything's set up on the 1-minute, which is what I look at. But this sort of pullback here was just similar to after we got this washout. It's washout low, pop back up. The retest was higher. It built a higher low off a key zone. And again, this was doing a similar type of thing, probably a bit wider. Is a stronger move up, but the same sort of thing. It pulled back. If it was looking weak, it really should have continued lower. It really should have taken out that low, that high. Sorry, yeah, these highs at around 56.70 at the first place, but it did. It washed them out straight back up in the resistance zone at 56.86. Back down, build your high low, and off she goes. So this could be all adding up to some bullish price action, and it's right up at that 56.86. So that's why adding all these together, even that intraday price action on the SPY, We know where the daily on the ASX is and the Dow. All these sort of add up to potential bounce on the cards. And potentially we're not the only ones thinking that, because a lot of the time, don't forget, they can use the SPY to hedge a down move. They might sell the SPY futures if, say the bigger fund managers or anyone that's got a massive portfolio. It's really hard to start unloading your portfolio if you think, coming off the highs, especially since we've been smashed, they might have been shorting the futures overnight, especially in the market. The US is looking really weak. Short the futures. Look for an area and a potential zone where you're happy to buy the ASX or your stocks, load up on that, and get out of the actual futures at the same time. All right. So I thought I'd just point that out today as something different. All right, let's get into the stocks. Looks like we've got a few popping up now. We might as well rip into it. Let me just get that up. All right. So we have first in, first, best dressed, first in, first served. Faro. Was there anything before that? CIA. Are you talking about the CIA or CIA? Champion Iron. All right. First thing I see is, and like I said, you just got to take note of the speed of moves, the reactions, and what happens, the depth of pullbacks, especially if you're looking to be bullish on anything. And looking at this, you can see the volume supported, and that little run up. There was really there's no one in the way. There's no sellers in the way of that move up, and it pressed up. The next about 4 or 5 days, it went sideways just in here. This is the end of 2016. I'm on a weekly chart still. And then we had this big, strong move up over the period of about 4 or 5, potentially 6 weeks, when it went from pretty much 50 cents right up to $1.40, close to $1.50. So what's that, 200% gain or 300% gain? I don't know if my maths are right, but either way, there's a bloody strong move up. And you can see with the volume supported, there's really some volume coming in. There was really no selling pressure there at all in the way of that move. People were chasing it up, potentially on the back of news. Right up until we started getting some profit taken. Of course, you're going to get that sort of reaction lower. Now, I want to draw this up because I think it's interesting. And I think it's worth, everyone doing a similar type of thing of just working through the price action, talking through it to yourself and try to think, okay, this is a strong market. We had a resistance zone, blown away, got all the way up here before it went sideways, not much happened. And then you got this move up, powerful move up. So anytime you get that sort of rally, there's going to be a reaction, probably a sharp reaction, as people try to lock in gains and run just as quick as people chasing the market higher. Anyone that got in early is really not going to want to give up on any gains, no matter what they think of the fundamentals. I think it's really silly just to focus on the fundamentals when you're up a couple 100%. That's a give me. So in essence, when we start looking at this price action, take into context this, we're looking at this big move up. What we saw is this pullback, and it was really probably somewhere around 40 to 50% pullback, say 40%, before we started holding a base in here and holding higher lows. So at that stage, it was looking really positive and looking for a potential secondary move up. And if we take it from that low of around, just say 30 cents up to $1.40, $1.10, if we can add $1.10 to $1.85, it takes you up to $1.95, nearly $2. Now, if that was the case, so that's what we're trying to, when we're analyzing this up until about before it started kicking up again, if we were going to buy it through here, that's what I would be analyzing personally anyway. You got this pullback, little pop up, pullback, higher low, everything primed, buying that move through $1.10 and looking for a target of somewhere around potentially $2. Now, the fact that it got up to only around $1.60, I know we got some profit there, but it didn't really kick on like it did with the first leg up. And then what we got, so if this is your next leg up we'll just take all that off. Your next leg up was only from, somewhere around 95 cents up to $1.60. And then the pullback was all the way back down to around $1.15 to $1.20. So that was quite a decent pullback. It's more like a 60% pullback. So that pullback is really a sign of weakness, more of a sign of weakness or potential weakness to come, which is what we saw. We saw the market pop back up. We've just simply retested the $1.60 area. and then you can see this price action here. So for me, I would be more concerned about this of just what's happened and the fact that like I'm sort of leaning towards potentially a break of that zone between $1.15 and $1.20. And really, anyone that's sort of still holding it here, potentially bought it in here, to start coming under pressure. But of course, we'll have to, it's only speculation. I'm just trying to analyze all this price action and what's happening. So this could easily roll over, have a deep correction. Your key, your anchor really for this move up at the moment. So we had one pullback, high, low here, push up. This high low is confirmed when you touch on the previous highs. Even if you don't break through, that's still your anchor to this move up, and that's coming under fire now. So we're pretty much, of this leg up, we've pretty much retraced 100% of that move. So 95% of that move with this price action coming back into that zone. Now, if you're not in it, you really would need to see a break of, or at least a pop up to 140, or maybe I would prefer to see a pop up through 140 if I wanted to get bullish on that again. Otherwise, if I'm just going to buy it here expecting that to run up, there's a potential I'm going to get squeezed out and it moves down through 115. So at the moment, if you're not in, I'd be sitting on the sidelines, just keeping an eye on it for a potential break up through 140, looking for my higher low, and then in I go, or just staying out completely because it could easily roll over, especially looking at the price action today. Well, not today. Why is that? Yeah, I know it's up the last few days. You can see it's pressed down, so wouldn't be overly confident on this one. Now, maybe I just got your joke there, mate. CIA, nice. Next one, FOD. Look. So you can see that weekly. It's curved up on the weekly, and again, this is a bit of the case of it's probably low volume. Oh, 3 million. Jeez, what's that then? Food Revolution Group. This is interesting. It's had a good vertical run up. So if I wanted to buy this, the price action I want to see, because I want the market, I want the price, I want the stock to prove itself to me. I don't want to be jumping in and being a sucker and get squeezed back out of the market. Okay, so there's sort of certain scenarios, I guess, that certain stocks, if you see certain price action, if you want to jump, if you're not in, okay, this is what potentially I'll be looking for if I'm going to be dragged in as a buyer. And first things first, I'll just be setting up my support line through the lows. You got your first low here. How do you run up? That's your next swing level is down around the 10-cent mark, and then it's pressed up. But the fact that you had this good strong move up, and then the market edged its way lower, you can see with this price action, bang up she goes, back down again, and then boom, pretty much straight back up to wash out these highs. Well, probably only by 0.5 cent or so. 8.5, yeah, actually 0.5 cent. Look at that high, and then today, down 11% today. So in a positive market, I'd be a bit concerned about that. Not to say, I just don't like that red candle, especially when you're up near the highs. So, and the fact that it pops a 0.5 cent through the highs, just remember, if this was going to go higher and you're going to get that fear of missing out, that FOMO effect of the market, people chasing it higher, they would be doing it. But instead, it's turned around and collapsed 11% today, pretty much. So it doesn't mean, just remember, it doesn't mean that the market, it's all over and we're heading south and that's it for the stock. It just means that you don't have any buyers up here. No one willing to buy it through 18.5 or 19. Maybe it hasn't quite set up. Maybe something else is on the cards. You never know. So what I would like to see from here, if we can just draw that up. So we had this little pop up, pullback, good run up, good pullback, good push up, and say we're somewhere around there. What I'd be looking for, I want to see from here, even if it pops back a little, but I want to see contraction in price. I want to see that price start to prove itself. And where it's holding up near the highs, I don't really want to see it back down to 12, 12.5, 13 cents. I wouldn't go near it in that case. I don't really want to see it get much lower than where it is at the moment, 15.5 cents. I want to see it start holding some higher lows. And that to me, and even if you get that sort of, what I say, contraction with lower highs, higher lows, when you get that squeeze, when it gets to that point of agreement, but I want to see it towards the top end of that range rather than down towards 12. To the top end, that's your first sort of sign that there's going to be strength. It shows you that there's a few people have sold it off the 18 and a half mark, but not enough to, it hasn't got enough fear in there, or there's still a lot of people that believe and they're willing to hold and not close out. So anyone that, maybe have bought it from 16 and saw this sort of start to capitulate, bang, they're straight out. Short-term gain, they're out. But not enough people to cause it to completely collapse down to 12 again. So it's holding up there. And then when you get this sort of contraction in price, you're getting further buying pressure. Buyers are still willing to jump in, up at higher levels. And they're willing to pay up for it. So that's a good sign of strength too. And then from there, it's really just all about your setup. And this could be something that sort of consolidates just below that 18 and a half and then starts to push up. So for me, I have to see that price action. I just wouldn't be jumping in right now. I'd be holding off. I'd want to see, put in a bit of time, um, of proving to me that it's a strong stock and proving to me that there's other people that think it's a strong stock and ready to jump in and put their money where their mouth is. Does that make sense there, Lauren? And if you get this type of price action there, bang, up she goes, long from 11. Nice, mate. Uh, if you've taken a partial, great. If you haven't, potentially think about at least taking a partial. I'm assuming you probably have. Hopefully you have anyway. If you haven't, don't say anything, mate. All right. So that is, we'll always go through there. FOD, SAS. Now, who's looking at Magnet? I've been looking at that too, and I've actually got that. This is something I've held for a while. Well underwater on it, but I do think they're doing some good things. I think we've had this in the past. We got stopped out. I think we had one gain in the past and one loss on SAS. So we're pretty much guessing about neutral on that. On our calls on it. So I still think it's more the weekly chart you've got to keep an eye on. We've had this big run up. I think this is sort of based around, they were doing quite well. The news flow out was really good, really positive. And then when it's sort of a bit of a buy the rumor, sell the fact, it got a bit overextended. Then they started implementing their satellites. They got the contracts started getting out there, and people were just booking profits. Just big sell off since probably early to mid 2017. But it's only really now we're seeing, I believe, the first signs of some buyers starting to step into the market. And I think the news of late has been fairly good, if I'm correct. Yeah, so they're doing some good things with their technology. They do little minor, if I'm right, little satellites, um, and they've done some really good launches. Everything's going well. I think it's just a very long process, a growth process for the company. And you're going to get these swings as people take a quick gain and away they go. But then you're going to get that second wave when it starts to consolidate and that sort of stronger move back up, which could easily take it through 29, 30 up to a buck, wherever. You don't know. I think it's very early signs, very early stages at the moment. If I wasn't in, I wouldn't get in. Probably I'm a bit bitter that I'm holding it. But we've got this sort of move down here, and I think it's got a bit of work to do. But you can see just now we've got a clear level around 7.5, 8 cents potentially. We've got this little washout and that consolidation for the last good part of a few months. So if we go back down to the daily, probably a bit clearer, and just draw that up. So you got that's your sort of zone through there. We've probably only just broken up and through today, hit 7.3 highs, 7.4 highs, just popped up through. And you can see it's holding, that's really just confirmation that we're holding that higher low at around 5.5 cents. I know this is all small, it's only small sort of moves, but it's sort of that early signs that, okay, it's starting to do something. And look at the volume that's starting to come in. As opposed to, I guess it's pretty clear volume on the way down too. Had this big sort of rush of volume, but you can see the last few days, it's, this little pop up through 7. It's really had some volume step into the market as well. So we'll have to keep an eye on this one. I think it's still got a long way to go. Ideally, I'd like to see it pop up, pull back, and then I'd like to see on a weekly chart, going back to that weekly, I want to see it build a higher low, because I think I'd ideally like to see the market compress. And I think it's got a long time to play out first, where the MAs come back in and then they cross over. The 20 will cross up over the 50. And I think if they can get a pullback into that, back into that, sit atop the MAs on the weekly, you got your high low. I think you can have a lot of fat in that trade towards the highs of at least 27, 28. But we'll see. But yeah, I think fundamentally they're doing quite well. technically it's getting there. I think it's found some lows. It's just whether it pops up, builds a lower high, and just presses down through 5. That's why it's showing early signs, but that's why you ideally want to work off your higher low, because that's confirmation that you can be on the right side. Not buy it now, it pops up, you're feeling good for a while, you're up 10%, then it rolls over because it's just a major lower high on the weekly chart. And and this goes back into, oh no, I won't bother drawing it. You know what I mean? It could pop up from here to 9. You're feeling excited. That's just a major lower high. Then it presses back through 5 and comes all the way back down to 2 cents. You just don't know. But if you're working off where it pops up to 9 and pulls back and starts to show signs on the daily of holding the higher low, yeah, by all means, start to jump in, I'd say, or accumulate. What was the other one? SAS, EDE. That just what I said on SAS, yeah, potentially is what we're looking at here. We're on the weekly. We're on the weekly here. So it's not. I'm not. Look, I'm not 100% on this one just yet, but you can see it's popped up, pulled back into that 8 cent mark, and potentially this could be the start of a secondary move up. And if your secondary move up is the same as your first, you're going from 4 to close to 14 cents, a 10-cent move. If you take that from around 8, 7, you're looking somewhere up here towards 17, 18, and it probably takes you into a small resistance zone, only a minor level. But that is going to be a handy move if you can get on board that. But looking at the weekly, it's just what I was saying, what I'd be looking for. That's not what I wanted on SAS. Potentially pop up. We've got pop up, pull back, chop around, but at a serious higher level, your key higher level, and then start to look for an entry off a major higher low. You've got an inside higher low, and away you go. So potentially that's what we're at that stage now on EDE. It's just choppy, that's all, and it's probably quite thin. It would have been hard one to trade because ideally you see this pullback pop up, potentially tested 7, and you would have been looking for an entry through high of 8.5. Underwater at the moment. Would have been a good intraday trade a few days ago, but it looks like it's holding 8. It's just holding up, but we'll see. If that starts to rise, even potentially you can buy that through, if you haven't bought it, buying it through 8.6 cents, 8.7 cents, 9 cents, and just holding your stop around 7.5, and see if you can press up and take out those highs at 13. So I think you've got this press up on the weekly. On the weekly, this will be a confirmed higher low on the weekly, which would lead you to believe we're targeting up towards 17, 18 cents, and then you're going to have 50, 100% gainer on your hands potentially. So yeah, just keep an eye on that one, guys. I just don't like the way the stochastics have come off pretty hard with this little pop up here, and it didn't really get too far. So I want a little bit more confirmation on this. EDE and ANZ, Mel, no worries. ANZ, I think you could probably forget about the daily just for now. There's only a couple of things. Look, the banks I always found the banks for me a bit harder to trade. They're not as clean, and they tend to wash out levels. You can see this press up here. It cleaned out these highs through, what's that high? Say 29.50, popped that straight back down again. And then from there, people just got creamed, just kept heading all the way down to $25. So I find them a bit tougher to trade. I don't think they're as clean. I think they're choppier. You probably got time to look at it on a bigger time frame. Now, one thing I do like about ANZ, probably have to take another step back. You can see, and we're just trying to put the full, a bigger time frame, the monthlies, then we'll get into the weekly and just try to build the picture on ANZ for you. So you've got obviously clearly big leg up, big pullback. You've had a secondary leg up. And what we're trying to analyze is whether this is the pullback or we get a bit lower. I think this is it. I'm not saying, there's no real support through here. If you take it across the lows there, we are right on the zone there. So I think there's a few things, but what I tend to like, I know the banks have copped it a bit, but they're money making machines, don't forget, and the fundies are always going to buy them. If they've they see them as cheap, as undervalued, they'll start jumping in, start edging in. Maybe you've seen that the last couple of days. We'll just have to wait and see. But I'm sort of looking at this, and it's more because you can see when it does pop up, like this is very similar to this original move up here. Then it chopped around, and you got a few. This is probably a bit choppy, and then when the market it's going up, down here, and it just can't get up into the new highs. More often than not, it's going to clean out the lows, and if it is bullish, you're going to clean out the lows, and that's going to trigger, clean out a few of these late buys that bought it in this zone for the last, that was through 2010, squeeze them out, and then bang, up she goes. So potentially, this is what we're doing here. I think there's a bit more to it. Obviously, the Royal Commission that's edged this lower, but you can see that type of price action is very similar. The choppy price action, we've probably got choppy price action with down, pop back up, down, pop back up, down. That to me is not conducive of a seriously weak market. And it's come down into a prime zone somewhere around 25. So just bear this in mind that if this is the zone to hold up, what are our lower time frames going to say? Stochastic's not a bad area. It's sort of towards that oversold area, potentially higher low, high low area where it's going to drag in some buy, longer term buys, your funds, anything, your major buys. It's from the monthly. I think you could say because of this price action up, this good correction, we had this pop up, similar type of thing here, choppy down into a support zone, and what we're trying to do is just analyze this. Is this the zone we're going to start to pop up, or we're going to blast straight through, and then it's all over from there? I wouldn't think technically you're going to blast through that zone, and even trade down to 22. I wouldn't expect that. I think you've got to have a serious pullback in the overall markets for that to happen, especially to a bank. What's going to cause that? Who knows? If there's a housing correction, which I think we're in the midst of at the moment anyway, I don't think that means a hell of a lot. You need a hell of a lot of foreclosures potentially um, for the banks to really start copying it, but they factored everything in. You know what they're like. So I'm really banking on this being a potential zone where it could easily pop up from. So if we go down to the weekly, not much for me is happening on the weekly. Um, the only thing that I'm seeing really is it's pressed down, it's popped back up. You had this little pop back up. This could easily be a lower high, but knowing the banks, you probably expect this to drag in some selling and selling to get squeezed back out as the market rallies. Okay, and I don't mean people selling long positions. I think more of people entering short on on the banks, for instance. So that what they're doing is trying to short into a really major area of around 25 bucks. Now the market's stretched down here. The weekly's not really showing much. Probably the only thing, and it's probably going to be hard to draw, that I could see as probably adds up is the fact that we've gone. I'll take this as I'm looking at this here. So that should move lower, and then we've corrected back up. And if you take an equal and opposite, this secondary move, this is sort of your secondary leg down. I tend to discount this a bit because I see from the highs down to these lows of around 26, say from 33, what's that, $7, from around 30 bucks down to 25. Or it could extend lower and squeeze a few more people about. But I don't mind the fact that it's squeezed out through 26. It's popped up off 25, key zone. Really, if you're trying to build a position that's a prime level, squeeze out 25, break 25. That in itself is going to cause some selling pressure and selling straight into some big orders to buy, if that's making sense. If we click it down to the daily, I don't mind the daily. I think we've got some sort of potential traditional divergence where you got a higher low on the stochastics, and you've got essentially a double bottom at 25. So for me, that's more of a bullish sign, and we could start to edge away back up again. And whether or not we do, I mean, who knows? But it's looking like there is some buying coming in. Potentially, there's some buying coming up. I think we're very early stages. All we can go by is the candles. The fact that today we've just broken through the minor, it's ever so slightly, a very small high at around 25.62. I don't normally analyze support zones by candles. I like to see higher lows, and we haven't seen anything like that just yet. So ideally, if I was going to buy this off the daily, I'd like to see it pop up, a bit stronger than that, 26.50. If it pulls back and starts to build your higher low, then I think the daily is going to start confirming some buying opportunities, along with the weekly and the monthly. The monthly's purely been in an ideal zone for buying. I hope that all that long-winded explanation makes sense. But we'll see. Let's just have a look at Bendigo then. Yeah, you can see that there's a zone through here. It's clear zone through 10. It's chopped here. This is way back in April. Again, in mid to end of April. Then we saw it back in June, touched down those lows around 10. Good reaction. Straight back and down to those lows. Cleaned it out. 1, 2, 3, 4, 5. 5 times in the last month and a half. It's touched down on there. So the more that it tests the zone, you think the more likely it's going to hold up. It's going to start to hold up. And you can see that reaction back up. We just got back up in the start of the month, November, and we come straight back in, straight back down, and we've reacted back off that zone. I'd want to see it react higher, pull back, and then build a higher low. And I don't mean a higher low like this. I want to see something that's popped up, had a good little run up, and then pull back in a shallow retracement to build the higher low. All right, but we'll just see how it plays out. What's on the weekly on this one? Yeah, I'm not a big fan of the bank, so I think pressure's down. It's just you're trying to pick the bottom. And I think everything that I've said, if you run into a bit of headwinds, you probably want to be out pretty quick. I wouldn't be buying the banks longer term just yet. I think you're going to have a lot of opportunity to get in. I'll be working off the weeklies mainly on the banks. What are the other banks doing? NAB, NAB and the daily is not a buy at all, and the weekly still not a buy. Just because it's down in that zone, I want to see it react off this. What's that zone around 24? But we'll see. This lower high in the monthly could easily lead to a push down to $20 on NAB. So I think I'd be still on the sidelines on that one. CBA for me, it's just a daily chart looking a bit better. You can see there's only a minor double bottom here. It's only a double bottom, but it's still the trend is down. Then we've got this contraction back up. This could easily lead to a lower high. Then you press down through 68, then take out 65. Who knows? But if we can pull back here and hold 69 and start to lift again, potentially you're going to have a little buying opportunity. If anyone can see what I'm talking about, I'll just draw that up. So I'm talking about action. If we've got a low through here, we press back up. And if this was going to be negative, you'd expect this to lead to a big sell-off down through here, straight back down. But instead, if we start to hold up here, and this is ideally what I'm looking at, up, pull back, we start to lift. If we start to, hold some higher levels, then I'll be looking to take a buy through a minor lower high, because I think the buyers are going to start to win out, and that could lead for a move. What do we take trades from somewhere around 65 up to 72, $7, add that to 68, somewhere around 75, which could take you back up to these highs at 75, 76. If we get this type of price action, I think CBA for me is probably something that, just looking at the daily price action could lead to a buying opportunity, because there's going to be a lot of sellers in here to get it squeezed back out of the market. All right, Westpac. Yeah, Westpac doesn't look as nice at all. It's still looking very weak, although, I'm not one to sit there and say we're down, it's oversold, it's good value down here. I'd want to see the action play out. I always don't want to waste my money buying it at a support zone. Okay, the bank's going to rally some stage, but whether it's tomorrow or 6 months to a year down the track before you get a front. Because if we buy it here, for instance, and it heads south a bit more and starts consolidating, you might have to hold it for 6 months to a year, and I think you're just wasting your money, wasting your time, locking up that money. I'd rather see it buying on the rise and then being proven right straight away. Take your gain. If it gets stretched, get out, and then reinvest that money somewhere else, and just do that. You don't want to be in the market for longer periods of time. You want to be short and sharp, is the way I'm looking. It doesn't have to be short and sharp, but you're trying to take chunks of the move out when it's rising. Take some of that leg out. You don't have to get the low or the high, and then reinvest the money. And if you get caught for too long, that's just as bad as getting into something that's not quite working out, and you're taking a stop, because you could be investing that money somewhere elsewhere and earning income off it. All right, last one, we just get on to BHP. Now that on the weekly, it's in an uptrend. It's just whether or not we're going to find a resistance exactly where it is now, around that $35 mark. All right, so we're clear going down to the daily. Probably don't need to go into the daily so much. This, well, yeah. What I don't like is, one, we're up at that $35 mark. We're up at a zone where you're potentially going to expect a reaction lower. We've pressed up for quite a while now. We could easily, and we've been a bit choppy up here too. You can see we pressed up, we chopped around, tried to go here. You can see that little red candle, and that was it popped its head up and through, took out these, the last probably 10 days, 10 highs, 10 days of highs, took it out, and then we proceeded to have a bit of a pullback and took out the lows as well. You want to see what I'm talking about here? We'll draw it slightly differently. So it was that sort of consolidation there. We popped out the top and then took out the lows. So what I don't necessarily like, and then we've gone straight back up again, and then we come straight back down. So it's starting, you can see how it's getting choppy. It's not clear cut where we're getting ahead of ourselves. We have a good little contraction and we start to get up again. You can see how this price action is a lot cleaner. When it moves down, it comes back down, it goes back up again. You can see that sort of price action is a lot clearer than what we're getting this chop here, and it's all because we're up near that 35. So potentially anyone that's bought it here, or even here is watching that. And if you're sitting on profits, the more that it starts to get choppy and starts to reject that 35, it's just the reverse of what we said before on Bendigo. The more times it rejects a level, for support or resistance, the more likelihood, if you're sitting on profits, you're probably going to either take some off or you're going to get out completely and book the gain. All right. So just remember that. And especially you got to really analyze those key levels, not so much the minor levels. Now that's probably more of a minor level. Actually, let's just see what it did around, was it 30? And we pressed up through 30, contracted back in and took off again. So when you get this type of price action, that's a fair bit different. 1, 2, back down. That could have been a nice buying opportunity, knowing that it's already broken up and through, and then gunning for that level around $35 with this push up here. Now, this is different price action to what we've seen anywhere in this move up previously from 2016. All right, so if I'm long, I'd be concerned, and depending where you're long from. If you're long from, say, here, okay, you can essentially just wait it up, wait off a bit, and just hold, because it still hasn't broken. After saying all that, look, that to me is looking heavy, but it hasn't broken any key support zone just yet. All right, so it could easily look heavy, chop around, and bang, up she goes again off a high low. So it can do all at once, chop up, chop around here, take out the highs, take out the lows, all this sort of stuff. But as long as it doesn't break a key support zone, it can come back down and retest it. It's just going to sucker in a few sellers, and then boom, up she goes. It could easily do that. But if it doesn't, that's only if it doesn't break that anchor level, that key support, and it hasn't. This is your rising support. So you're probably looking around 31 at the moment as that key sort of support level. Now we're getting there. I mean, it's not to say it won't, but that 31, what are we now, 31.73? If it breaks through there, I think that's going to trigger a few sellers. Anyone that's probably potentially just holding a stop under there. And that's what we would normally do. I think most traders, if you say you bought it here around 22, you're probably going to tighten your stop up around 30, 30 and a half. And you say, if it breaks 31, I get stopped out, so be it. I think it's going to roll over. And you might find that a fair few people have their stops there. It's going to trigger some exits, it's going to trigger some potential shorts as well off a lower high, and look for take some money off the move down. So I think that's probably a line in the sand at the moment. If it holds up, yeah, we could build for a move back up again, or it is looking heavy and we're going to roll over. But yet nothing's proven just yet. We've got a lower high in here still in play for the downside, which hasn't proven, and we've still got this key level at 31 in play as well. So as long as it can chop around through here and then start to lift, if you're not in, potentially go short through 31 or go long through, maybe 34, if that makes sense. But stay out of the chop in the middle. All right, probably got ahead of myself there. Sorry about that, guys. Got a bit over the mark there. Yeah, that'll probably do it for the day. Any questions on that? Just remember you can give us a call, just shoot us through an email to support@tradesetup.com.au. If there's something you didn't understand, if there's something we missed and you want to still take a look at, send it through on a chart. I'll happily draw a few things up and write a few comments and get back to you. Anyway, thanks very much for joining me again. We're back in on Monday again at 12:30. Have a great weekend and we'll speak to you all soon. Cheers, guys. All the best. I'll speak to you later. Bye.